Okay, my friends, so we've got a lot to run through today in, let's call it, a mid-monthly property update video. Now, of course, we've had some major changes to the political scene, i.e. these two guys have now resigned, making my life much more difficult when I'm choosing my property update video thumbnails. However, despite the mess that we're currently in, the show must go on. And hopefully some of the information that I share with you guys today will prove useful and give you guys some good food for thought. So obviously, guys, we've seen the UK house prices rising at its fastest rate for 18 years. And of course, one of the main reasons for this, as many of you know, is the supply and demand issue. And like I've mentioned many times on this channel, Halifax, one of the country's biggest mortgage lenders and part of the Lloyds Banking Group, said the market defied any expectations of a slowdown, with prices rising year on year in June by 13%, which is pretty remarkable when we think about it. And as we're talking about records being broken, a typical property now, my friends, costs £294,845. Crazy. And if we just want to put that into perspective, house prices have risen every single month over the past year and climbed up 6.8% so far this year, and in cash terms that's £18,849. So just get your head around that. And obviously we know inflation, and we're not going to talk about that on this particular video. That's obviously played its part, but guys, this is crazy. They just seem to be going up and up each and every day. However, as they continue to say, and this is something that I have mentioned many times as well on this channel or on the shorts, is that in time, through increased pressure of household budgets, the cost of living, which is obviously taking its toll on many of us, and the higher interest rates, this should have some impact in terms of not just affordability, but in terms of the transactions going through, and of course the demand for buying properties, thus relating in prices potentially slowing down. Moving on. Now, I found this one quite interesting, and this one actually made me laugh a little bit, and it's about property porn, my friends. The TV's obsession to home buying fueling the UK's housing crisis. Now, I've mentioned this quite a few times, and again, as an investor, I'm always trying to think of the best ways for you guys to be happy to live your life on your own terms. And for myself, it has literally been to rent where I live and invest where I buy, and I then use that income to basically fund my lifestyle, be that traveling, hence you can see the tan, or simply renting where I want to live. But again, I understand that's not for everyone. Now, many of you have probably watched Location, or Grand Designs, or even Homes Under the Hammer as well. I know I definitely got addicted to Homes Under the Hammer and this guy's face a while ago when I started doing renovations. But what this goes on to say is that within the UK, there is this obsession with home ownership. And again, that therefore fuels the demand for where we currently are and house prices going up. There's simply not enough supply out there, my friends, in order to meet that demand. And as a result of that, house prices are essentially going through the roof. But I just want to touch on some interesting stuff I took from this article, which is, in today's economy, up to a third of young adults will rent privately from cradle to grave because they can't afford a home, which is, I suppose, sad if we just look at it from the context of what we've been taught growing up, i.e. home ownership seems to be the be and end all. But then playing devil's advocate to that, my friends, I would say this just gives you opportunities to think outside the box. And one of the things I want to try and get you guys thinking about is potentially investing where buying a property may not be the most feasible or sensible decision based on where you currently are today. And again, it just moves on to say, if there is a British equivalent of the American dream, it is simply home ownership, particularly owning more than one, and ideally making money from them. And George Clark, who is, well, he's an architect and a social housing campaigner. One of the sad things about our obsession with homes is that we've got a culture that's obsessed about home ownership. I couldn't agree any more with that. And he does go on to say a quote that I'm sure many of you, especially from the UK, have heard thousands and thousands of times. So guys, are you obsessed with home ownership? Is this the be and end all? Have you even considered the possibility of perhaps investing your money to then allow that to pay for where you live? Could that be less of a burden? Perhaps. Of course, we can dive into that in more detail in another video. Moving on, my friends. The UK has had a big drop in people moving homes after tax break lapsed. Now, Halifax has stated a decline expected after the end of stamp duty relief. And we have some interesting stats in this particular article, my friends. The UK has had a big decline in the number of people moving homes in the first half of the year after the expiration of a tax break on purchases, essentially the stamp duty land tax. But then just moving on to some other stuff that I thought was quite interesting is that other pressures on household budgets must be taken now into account. The overall cost of home moving remains an expensive endeavor, and with the cost of living, as I just mentioned a few moments ago, could this now mean that despite the demand of obviously wanting your own home, unfortunately it may just not happen? And rather than seeing stats and figures going up, we actually have one that's actually gone down. A total of 172,510 people moved homes in the past 6 months up until June, which is down 35% from last year. So again, you can definitely see that the stamp duty fueled this, and it was something that I was worried about, as I didn't want any of you over leveraging. So hopefully guys, you've locked in some good rates, and somewhere in the future you don't end up with negative equity. Also interesting, and this was something I had no idea about, home relocators now make up 47%, be nice if I could read, of all purchases, which is actually down 9% from a year ago. So again, very interesting. We are seeing some slowdowns in certain types of the housing market, which is why I try and bring as much different types of contrasting information for you guys, because although we're seeing that, last week Halifax also said that house prices rose in June at the fastest pace since early 2007. So it's crazy. We may not be getting the same amount of purchases going through, but we're still seeing the house prices still get pushed up, because there are still people out there willing to pay what the actual house price is listed for. Next up, my friends, house price growth is easing, but rents continue to take off. And just here, I've highlighted a different picture for rents, it seems, as they continue in an upward spiral, considerably outpacing monetary inflation by a large margin. Hence, yields are improving rapidly across the country, therefore incentivizing buy-to-let purchases. Now, I find this quite interesting because there is also a lot of news articles and a lot of reports saying that buy-to-let landlords are leaving the market. It'd be interesting to see the statistics on this in terms of how much more you're getting from a yield perspective. But if you just look at across the UK, the rent growth stands at 19.1% year on year, my friends, which is remarkable. That is a crazy statistic when you think about it, especially with the cost of living that many of us are now having to battle with. The Telegraph has reported that house prices need to fall by more than 10% to counteract rate rises. Even if the property prices fall, buyers will still face higher monthly bills, which is obviously something that we always need to factor in, and something I talk about all the time. It's one thing saying, yes, demand is there, supply and demand argument, but it's also about feasibility, affordability. Just because you want something doesn't necessarily mean that you're able to get it, and that's something that we should always be mindful of. And the article states that hopeful first-time buyers who are holding off on potential house purchases while they wait for prices to fall may be in for a nasty shock. Yes, interest rate rises will push up monthly mortgages dramatically, but even a 10% fall will not make homes cheaper to buy than at the start of the pandemic, according to a new analysis. And when we think about inflation, I think it's estimated to be around 11% by the end of the year. It's not looking great, is it, my friends? It's really not looking great. Moving on, my friends. The market has turned. House prices poised to start falling as property boom meets end. Interesting. Now, that's a bit of a clickbait title, obviously, but property buyer inquiries fell in June at the steepest rate since COVID shut down the housing market in 2020. And if you just look at this, the Royal Institute of Chartered Surveyors, i.e. RICS, said today, July 14th, although I'm recording this a few days later because I was, my friends, drinking too many daiquiris in Ayia Napa, that 27% of professionals reported a fall in interest for potential house hunters. And I'm just going to run through some of the stats that I've highlighted on this article because I don't want to keep you guys here forever. But Mark Wiggins stated the market has definitely turned, as he's now seeing fall-throughs and renegotiations are now taking place. And despite the demand in the housing market cooling, the direction of house prices was upwards, with 65% of professionals reporting an increase. Crazy. And now, of course, the RICS attributed this to the lack of available properties for buyers to choose from. But just some things that I just want to quickly touch on, guys, is that looking further out, 37% now of these experts foresee prices continuing to climb over the next 12 months. And although this is down compared with the high 78% seen in February, that's crazy. We're still seeing people saying that house prices are going to continue to rise. So the truth of the matter is nobody really truly knows if there's going to be a property crash or not, because even the experts, they're torn. They're torn in what they're seeing from the data. And again, the crazy thing with data is you can manipulate it anyway. And it just states here that for property priced between 500,000 and 1 million, 39% are seeing sales prices beat the asking prices, while those listed more than $1 million are actually selling typically below. Now, I'm not sure of all the thresholds for stamp duty, but that could be obviously one of the reasons. So friends, it's going to be really interesting to see if there's going to be a property crash. Please let me know your reasons for why you think it's going to be a crash or why not. And as always, my friends, thank you so much for sticking around when you guys could have been doing anything, but you chose to spend a few moments with me, and that makes you pretty awesome. So until next time, my friends, thanks for watching.